Porsche, the name that once commanded the automotive world with its iconic 911 and luxury sports cars, is in serious trouble. A company known for its relentless pursuit of performance, precision, and luxury has found itself facing a massive financial crisis. From staggering losses to an existential identity crisis, Porsche's path forward is uncertain. But how did a brand that once thrived with sky-high profit margins end up in the red? And can it recover? Let's break down the issues and see whether Porsche is truly in a freefall, or if this is just a temporary pit stop on the road to recovery. A fall from grace. In the third quarter of 2025, Porsche reported a shocking loss of $1.03 billion. To put that into perspective, just a year earlier, the company had posted a profit of $1.04 billion. That's a jaw-dropping 99% drop in operating profit. A company that once enjoyed an 18% profit margin at its IPO in 2022 is now struggling to scrape together even a 2% margin for the full year. To make matters worse, the company has warned it will have to slash its 2025 dividend to shareholders due to the poor results. The numbers are grim. Porsche, a brand that epitomized automotive excellence, is now fighting for survival. Porsche's bold EV push. That fell short. So, what went wrong? The root of Porsche's troubles lies in its ambitious yet problematic shift towards electric vehicles. A few years ago, the company took a huge gamble, betting big on EVs with the launch of the Taycan, a sleek, high-performance electric sedan designed to compete with Tesla's Model S. On paper, it seemed like a winning move. After all, Porsche had the brand recognition, the engineering excellence, and the performance pedigree. But the reality was less rosy. While the Taycan was praised for its handling and driving experience, its high price and limited range made it less appealing compared to more affordable, tech-packed EVs from Tesla and up-and-coming Chinese manufacturers. The market was flooded with cheaper options, and Porsche's EV offerings started to look overpriced and out of touch with what consumers were looking for. Next up was the all-electric Macan, Porsche's best-selling SUV. The Macan went all-electric in a bid to capitalize on the EV wave. However, sales for the electric Macan lagged behind its gasoline-powered predecessor. The electric Macan only recently started to edge ahead in sales, but it still makes up just 55% of all Macan sales as of 2025. Even with this growth, Porsche's EV sales are still falling short of the company's high expectations. Despite making up 35% of Porsche's global sales in 2025, EVs haven't become the cash cow Porsche had hoped for. In Europe, where electric cars are growing in popularity, Porsche's EV market share is strong, but in the US and Asia, the response has been tepid. High-end customers are still hesitant to make the switch to electric, and Porsche's costly investment in EV technology has not paid off as expected. Porsche rethinks its electric future. Facing a harsh reality in the electric vehicle market, Porsche has started to hit the brakes on its all-electric future. The next generation 718, Boxster, and Cayman, originally planned to be EV-only, will now include gas-powered versions. In fact, the company's new entry-level crossover, set to arrive in 2028, will also feature a combustion engine to cater to US customers who are still loyal to traditional gasoline SUVs. This dramatic shift in strategy comes with a hefty price tag. Porsche is expected to spend a staggering $2.9 billion just to retool its factories and abandon its previously planned electric models. When you factor in canceled battery projects and restructuring costs, the total hit to Porsche's 2025 earnings could reach around $3.3 billion. The company is essentially scrambling to fix its missteps in the electric vehicle space, and the cost of that correction is bleeding into its finances. Rising local competition and national pride. If Porsche's troubles with EVs weren't enough, the company is also facing a steep decline in sales in one of its most important markets, China. In the first 9 months of 2025, Porsche sold only 32,195 vehicles in China, down nearly 10,000 units from the previous year. That's a brutal 23% to 26% drop, cutting sales in half compared to their 2022 peak. The rise of domestic automakers like BYD, NIO, and XPeng, offering high-tech, affordable EVs tailored to local tastes, has significantly impacted Porsche's performance. These local brands are eating into Porsche's market share, with consumers in China increasingly favoring domestic products over foreign imports. Adding to the challenge, national pride plays a role in the shift. Chinese consumers are more inclined to support local companies that represent China's growing strength in the automotive industry. To combat this, Porsche has appointed a new CEO, Michael Lears, who comes from Ferrari and McLaren. Lears, who takes over in 2026, has one clear mission: make Porsche relevant in China again. But turning around Porsche's image in a market that's quickly moving on from foreign luxury brands will not be easy. Tariff trouble in the US. While Porsche is struggling to regain its foothold in China, there's another headache brewing in the US. Since August 2025, US import tariffs on European cars have been a stiff 15%, and at one point, they were as high as 27.5%. This is a massive blow to Porsche, as the company has no manufacturing facilities in the United States and must ship cars from Europe, incurring hefty duties on arrival. In fact, Porsche's CFO has warned that these tariffs will cost the company an estimated $700 million in 2025 alone. Porsche initially tried to absorb some of the costs to keep US prices stable, but as a result, their already thin profit margins have been further squeezed. To offset the tariffs, Porsche has started raising prices for American buyers. But even this strategy has its limits. If the tariffs remain high, Porsche may eventually have no choice but to set up manufacturing operations in the United States, something the company has resisted in the past. What is Porsche becoming? Beyond the financials, Porsche is facing a deeper existential question. What egg is the brand becoming? Once known for its precision engineering and the legendary Porsche 911, the company now finds itself selling more SUVs than sports cars. Nearly 60% of Porsche's sales are now SUVs, and the company is heavily investing in electric models and entry-level crossovers to cater to mass-market buyers. This shift away from its sports car roots is causing concern among enthusiasts. If Porsche continues down this road, could it lose the very essence of what made the brand special? Is a Porsche still a Porsche if it's just another plush electric SUV? The brand's legacy of high-performance sports cars is at risk of being diluted by a push to appeal to a broader, more mainstream audience. Can Porsche make a comeback? Despite the struggles, there are still reasons for optimism. Porsche is not going broke. It continues to sell over 300,000 cars annually and generate over $28 billion in revenue. However, its market cap has been slashed in half, and investors are watching closely to see if the company can regain its footing. Porsche's leadership believes that the company can turn things around by 2026, but the path forward will require hard decisions, costly investments, and a redefinition of what Porsche represents in a changing automotive world. Can Porsche survive its crisis? Porsche is at a crossroads. The brand is facing a perfect storm of financial struggles, market shifts, and an identity crisis that could fundamentally change its place in the automotive world. The company must adapt quickly if it hopes to survive. But at what cost? As the electric vehicle revolution continues to reshape the industry, Porsche needs to find a balance between innovation and its cherished performance heritage. In the coming years, Porsche will need to prove that it can still live up to its iconic motto, "There is no substitute." But can the company make the necessary adjustments without losing what makes it truly Porsche? Only time will tell. If you enjoyed this deep dive into Porsche's current struggles and future potential, Don't forget to hit that like button, subscribe to the channel, and turn on the notification bell so you never miss an update. Catch you in the next video, and as always, keep living the ideal lifestyle.